Hi, I wanted to give you an answer to essential question number one that was given on October 31st, 2011. So let's go ahead and start here with Black, dealing with question number one. These are kind of generic questions. The first one says that you have to downsize your business, and what it's describing here, and here's the operative part, you let 2 employees go. So what's happening here is your operating expenses are dropping by a little bit. That goes ahead and makes it so that your net income goes up and your cash from operations goes up. Now you could have it being ambiguous if you say things like, oh, the revenue must be going down, but I think this right here is supposed to be the important part. So let's go ahead and move over to the next question. And you raise your prices but don't lose business because of it. So we should interpret this as an increase in revenue, which means an increase in net income, which means an increase in cash from operations. Remember this connection. So anytime you're going to see net income change, it's going to flow on over and make it so that the net cash flow changes, and it'll go in the same direction. Let's take a look at the next question, which is take out a loan to have extra cash in hand, 0 interest loan. And here we are seeing the cash coming in, so that's an increase in assets, and that's balanced off by an increase in liabilities. Remember, the balance sheet has to balance. So if you see something go up in assets, you're either going to see a decrease in another kind of asset, or an increase in liabilities, or an increase in owner equity, some kind of combination of that. The other thing that you got to remember is that whenever you have something go on the balance sheet that has cash involved, there's typically kind of an echo in the cash flow statement. In this case, we have an increase in cash from finance. So cash coming into the business is always going to be a positive number. So let's move on over in green for the next question, which is a client pays for 6 months of services up front. Believe it or not, this shows up on your balance sheet as a liability because you owe somebody else money. This is what prepaid stuff does. But please note, the liability has to be bounced off by something which is an increase in assets. And what's going on here is you're getting another source of cash from finance, essentially, is what it is. Later on, you'll start having some revenue because of this, but right now this is primarily what we're focusing on. So let's go ahead and switch over to yellow to make it so that we can have a payment on your loan, 0 interest. So what you're seeing here is your cash going away because you're making the payment. Your liabilities are going away. And the flip side when you make a payment is that you'll have a decrease in cash from finance because cash is flowing out of the business. So let's go ahead and move over to another question. And it's like, oh, I found a purple color here. So for purple, price of your inputs increases. That means expenses, and you keep prices the same. So your operating expenses are supposed to go up on that one. So this is things like natural gas, tomatoes, and stuff like that. Your net income goes down, and your cash from operations goes down. Now please remember, these guys are always going in the same direction. Another thing to remember here is even though expenses are negative, it's the convention on the income statement is that the normal direction is a positive. So we had an increase in expenses, so we have an increase in something which is normally reported as a positive, so that part kind of makes sense too. And let's go ahead and get us a new color here, which will be whatever that color is. I don't know, I had a small box of crayons, so it's green, yellow, whatever that is. A break-in causes some damages you have to pay repaired. Increase in expenses again, decrease in net income, increase in cash flow. We try to set it up so it was kind of clear that it was an income statement thing rather than a balance sheet thing. And then the final one, which we'll do in, I guess that's an orange color right here, is that you accept a friend's offer to become a partner in business for $50,000. So yay! Owner equity goes up, and at the same time, assets go up. And please note that those guys balance each other off. Now please note, part of this was cash. So when cash was flowing in, you had an increase in cash from finance. So this should be the essential question number one from October 31st, 2011. That's in the fall. Thank you.